Hey guys, I am making this video to help anyone out there who is interested in learning more about credit cards and credit builder cards. And to give some background on who I am a 22-year-old recent graduate from college, and I have never had a credit card before. And I've always been kind of scared of credit cards because I've thought I wouldn't need them because I always saved up money and used whatever my savings were to purchase stuff. So I've always used a debit card, and I thought that this would be good for not having to worry about owing people or some bank a bunch of money. But as you move forward in life and you want to buy a car or a house, or for whatever reason you need to start taking out loans, it becomes increasingly important to have a credit history. And the point that I'm trying to make here is that to a lender, to the person at your bank, having no credit history is worse than having a bad credit score. And so if I were to walk into a bank right now with no credit history and try to take out a mortgage for a house, if I could convince the banker that I was a worthwhile investment on his or her end, I would get an extraordinarily high rate. And this is because they simply don't have any information or evidence to suggest that I'm somebody who will repay people back when I've taken out loans. So having a credit card is a very nice way to build a credit history in order to show people that you're someone who is responsible and deserving of a larger sum of money to make a significant purchase like a house or a nice car. And in addition to that, a side benefit of using credit cards is the fact that you do get very nice incentives to use them, namely cash back, airline miles, those kinds of things. So you can, if you really like getting rewards, use credit cards. But, and this is the main caveat with using credit cards, you need to make sure that you have a balance of 0 at the end of your credit cycle. And if you do not have a 0 balance, if that number is positive, you're going to get charged a fairly high interest rate on that non-zero balance. And that's how the credit cards make their money, and the credit card companies make their money, and how they're able to offer people who are more responsible a bunch of rewards for using that credit card for that month. And so if you're like me and you have never taken out a loan before, or you've never had a credit card before, how do you get into this process? And so the answer to that question is you have to look into things called credit builder credit cards. And these things are things that you put down initial deposits, and based on the value of your initial deposit, you're given a line of credit. So in the case of one particular card that I'm looking at, if you pay them $500 initial deposit, which you get back at the end of a certain period or when you close your account, that becomes your line of credit. And so if I made a $500 initial deposit, that means that each month I can spend and put up to $500 on my balance at one point in time. Now, if I needed to make 2 purchases of $500 during that same month, what I can do is I can make the initial purchase for $500, pay down my balance to 0, and then make the second purchase for $500, and that would keep me within my line of credit, my credit limit for that current month. And so a very important term, definition to understand when dealing with credit cards is this thing called balance. And so balance is how much money you currently owe the credit card for that month. And so if at the beginning of the cycle you just purchased a $100 TV or $200 TV in this example, your balance at that instant becomes $200. if you then went out and bought a $30 remote for your TV using that same credit card, your balance would then be $230. And so the balance is kind of this running total of all the money that you owe the bank at that instant in time after you've made the purchases for that month. And so where do you get charged fees? So if your balance is not zero, if it's greater than zero at the end of the cycle, you will get charged an interest rate. You'll get charged interest on the balance that you currently owe the credit card company. And so, to give an example of this, if your balance was $100 at the end of the cycle and your annual interest rate, APR, was 24%, then you're going to be charged 24%, which is the annual rate, divided by 12, which would be the per month rate, and that will be equivalent to 2% interest for that $100. So you get charged $2 in interest for that month for owing the credit card company $100 at that instant that you roll over to the next credit cycle. So the key thing to take away from this is the fact that you can have that $100 in your account for the full 29 days or however long your cycle is, but on the 30th day or the last day of that credit cycle, if you can just pay it off and have a zero balance, then you do not get charged any interest because there's nothing, you don't owe the bank any money at the point in time when you are asked for that. Okay, and so this is a nice feature that you can use to help your not pay interest fees is a feature that cards offer called recurring payments. And so recurring payments are things that you can customize heavily with your banker, and you can choose when the recurring payment will be applied to your balance. So if I told my banker that at the end of every month, make sure to put $100 from my bank into my credit to pay down my balance, you can do that. You can also configure your recurring payment as a variable, and it would just be whatever your current balance is. So if my balance was $142, then I would set up a recurring payment to withdraw that $142 at the end of my credit cycle, so that I would have a zero balance when the time came around to actually charge me the interest. And so another key thing to take home about your security deposit is that no matter how big it is, no matter how big your line of credit ends up being, if you have a non-zero balance at the end of the month, if I owed $100 and I put down a $600 initial security deposit, none of that $600 security deposit is going to pay down that $100 balance at the end of the month that I missed on my credit cycle. That $600 is simply there in case you're somebody who walks and flies away and no longer exists to the credit card company. At least they have $600 to pay down all the money that you took out. So the key thing here is that your initial security deposit has nothing to do with helping you out when you have a non-zero balance at the end of your cycle. You're still going to get charged interest for that cycle. And this underlines the point, yet again, that you need to make sure your balance is zero at the end of your cycle. And so you do get your initial security deposit back when you close your account or your account gets upgraded. So in the case of the Amazon Store Credit Builder card, if you can pay 7 consecutive months your balance, then you are upgraded to a higher level card and you can borrow more money. So the key thing here is that with a lot of these things, you need to have used the card every single month for those 7 months in order for them to consider upgrading you and trusting you with a higher credit score. You need to have actually used the card and paid down the balance. If you just hold on to the card and never use it, you're not going to be eligible for being upgraded. So there's an incentive to actually use the card, because the goal here at the end of the day is to help you build a better credit score that will help you get a lower rate for major purchases later on in your life. And then yet the final thing that I'd like to say is that if there's anything that's unclear, and there are a lot of times in which these credit cards and credit builder cards are going to be very specific and unique to whatever bank you're working with, ask your banker to go over every single detail with you that you're not clear on, in order to understand how you end up getting charged interest at the end of the day, any fees, what are the fees, are there fees associated with going over your credit limit for that month, and these are all things that get very specific, and so I can't cover them in this video. These are things that you're going to have to ask and find out on your own if you're going to do this, but at the end of the day, having a credit card is very important to build a credit history, and you need to have one for the sake of not getting slammed later on in life when you don't have any credit score because you were too scared to open up a credit card. And so I hope this is useful information for people out there, and I wish you all the best of luck with this stuff. And thanks for watching.